Welcome to your personalized deep dive. Today we're going to be looking at ITC Ltd and their financials for the second quarter of fiscal year 2025. Think of this as your cheat sheet to understanding not just their numbers, but what those numbers tell us about ITC's moves in this changing market. We've got their report sent to stock exchanges, a media statement packed with insights, and even a glimpse into their sustainability efforts.
It's super interesting to see how ITC is handling a dynamic market, going from their iconic cigarettes to newer ventures in hotels and packaged foods, all while dealing with a tricky economic landscape.
Yeah, first things first, they're doing pretty well. Revenue's up a strong 16% year on year to reach a gross revenue of 20,360 crores. But that impressive figure doesn't tell the whole story, does it?
Not at all. While overall profit is up, there are some pretty interesting variations between their business segments, and some unique challenges are popping up too.
Okay, so this is where it gets really interesting. Let's dive into their FMCG Others segment. This includes everything from food brands like Ashirvad and Sunfeast to personal care products like Fiamma. This segment is like a microcosm of ITC's diversification strategy.
Right, and they're seeing some good growth in staples, snacks, dairy, even premium soaps. But their notebooks business took a hit. It seems like lower paper prices led to more competition from local brands. Their Classmate brand especially seems to be feeling the pressure.
So it's not all sunshine and rainbows, even in a segment that's performing well overall. How are they responding to these challenges?
Well, ITC is clearly focused on innovation, especially with what they call value-added adjacencies. They're leveraging their existing brands to introduce new product lines that complement their core offerings, like take their Ashirvad brand. It's already a household name for atta, or wheat flour.
Right. I use their atta all the time.
Exactly. But now they've launched Ashirvad soya chunks and roasted short vermicelli. They're tapping into the trust consumers already have in the Ashirvad name and extending it to new categories that fit with Indian cooking habits.
That's a smart move. It lets them leverage existing brand loyalty to sell higher margin products, even if overall consumer spending is down because of the economic slowdown.
Yeah, and they're also really into digital tools, both to streamline their distribution and to connect directly with retailers and customers. They even have an app called U-N80. It links them with over 7 lakh stores.
Wow, that kind of reach is pretty impressive. It shows how committed they are to staying ahead of the curve in a rapidly changing retail landscape.
Definitely.
This UN80 app is a game changer. It gives them direct access to so many retailers and helps them tailor their offerings to specific regions and customer needs. That's crucial in a country as diverse as India. But let's not forget their legacy business cigarettes. How's that segment holding up?
It's still a major contributor, with a 7.3% increase in net segment revenue. But they're not immune to cost pressures, especially with rising leaf tobacco prices.
Yeah, that makes sense. They can't just keep raising prices indefinitely in a price-sensitive market. But they also can't afford to let their margins get squeezed too much, so what are they doing?
Seems like a mix of carefully managing costs, making strategic pricing decisions, and focusing on their differentiated and premium cigarette offerings. They're essentially trying to appeal to a more discerning smoker who's willing to pay a premium for quality.
But that raises an interesting question. Are they trying to attract a more affluent, health-conscious smoker? Is that even possible?
It's a risky strategy for sure. The tobacco industry is facing more and more scrutiny globally, and even premium offerings might not be enough to offset the long-term decline in smoking rates.
Okay, now onto a segment that's really capturing attention: hotels. It feels like ITC is making serious waves in the hospitality world, and their financial performance reflects that ambition.
Absolutely. Revenue is up over 12% year on year, even on top of a strong base from last year, which included business from the G20 summit in India. They're expanding their footprint significantly. And here's the interesting part. They're doing it through what's called an asset-right strategy.
Wait, what does that mean? It sounds kind of technical.
Basically means they're focusing on managing hotels rather than owning them outright. It's less capital intensive and allows for faster expansion, which is key in a competitive market.
So they're being more selective about where they put their money, focusing on properties that align with their brand and overall strategy. I can see how that would be a smart move, especially given the current economic climate.
Exactly. And they're not just expanding domestically. They're looking at international opportunities too. Their new property in Sri Lanka, the ITC Ratnadipa in Colombo, is a prime example of that outward-looking approach.
And wait, didn't you say they're building super premium residential apartments as part of that development? Wow, they're really thinking big.
They are. It seems like they're not just in the hotel game anymore. They're creating an entire lifestyle experience. They're betting on people wanting to live the ITC lifestyle 24/7.
It's a bold move, considering how much people value experiences these days. But it could pay off big time if they can pull it off. Now let's shift gears to their agribusiness. This one seems to be on fire, with revenue jumping a whopping 47%. What's driving that kind of growth?
Well, there are several factors at play here. Their leaf tobacco exports have been really strong, capitalizing on global demand. But they're also seeing excellent performance in their value-added products,
Yeah.
things like coffee and spices.
This 47% jump in agribusiness isn't just a number. It means ITC is capitalizing on the global demand for Indian spices and coffee, strengthening their position in this growing market.
Yeah.
So they're moving up the value chain, which allows them to capture more of the profit margin. And it sounds like they're not just reacting to market trends, they're actively shaping them.
Precisely. And they're using technology to make their operations more efficient. Their AI-powered buying platform for leaf tobacco is a great example. It allows them to source tobacco directly from farmers, cutting out middlemen and ensuring fair prices.
But it looks like not all their segments are enjoying such smooth sailing. Their paperboards, paper, and packaging segment seems to be facing some pretty stiff headwinds.
Unfortunately, yeah, that's the case. This segment is getting hit from multiple sides. There's intense competition from China, especially with their lower-priced offerings flooding the market. On top of that, they're dealing with high wood prices domestically, and demand just isn't as strong as they'd like it to be.
Ouch, that's a tough combination. So how are they trying to navigate this difficult situation?
Well, they're not giving up without a fight. They're diversifying their product portfolio to offer a wider range of options, and focusing more on exports to try to find new markets. And of course, they're implementing cost-cutting measures to try to protect their margins as much as possible. It's really a battle for survival in this segment.
It sounds like it. You mentioned sustainability earlier, and it seems like that's more than just a buzzword for ITC. They've woven it into their business practices across the board. But before we jump into that, let's take a quick pause.
Welcome back to our deep dives into ITC Ltd. We just left off talking about their commitment to sustainability, and it seems like that's more than just a buzzword for them.
It really is. What's fascinating is that their commitment to sustainability isn't new. They've been water positive, carbon positive, and solid waste recycling positive for years, like 22, 19, and 17 years respectively. They're clearly walking the walk, not just talking the talk.
That's a long-term commitment that goes way beyond just checking boxes. And it seems like that dedication is getting noticed. What kind of recognition have they received for their sustainability efforts?
Well, they've been included in the Dow Jones Sustainability Emerging Markets Index, which is a pretty big deal. They've also achieved an AAA rating from MSCI ESG, the highest among global tobacco companies. So they're being recognized by both investors and sustainability rating agencies, which adds credibility to their claims. That's impressive. It sounds like they're genuinely trying to be a responsible corporate citizen. But let's be honest, they're still a tobacco company, and that's a controversial industry.
Yeah, there's no getting around that. It's important to remember that this is a company with a complex legacy.
Yeah.
But they're clearly making an effort to diversify their portfolio and to invest in businesses that are more aligned with a sustainable future.
It'll be interesting to see how that evolution plays out over the long term. We touched on their focus on innovation earlier, especially in their FMCG Others segment. Can we dig a little deeper into what that actually looks like?
Sure, they're not just adding new products, they're strategically expanding into what they call value-added adjacencies. Basically, they're leveraging the strength of their existing brands to introduce new product lines that complement their core offerings.
Can you give us an example?
Take their Ashirvad brand, for instance. It's already a household name for Atto or wheat flour. But now they have launched Ashirvad soya chunks and roast short vermicelli. They're tapping into the trust consumers already have in the Ashirvad name and extending it to new categories that fit with Indian cooking habits.
That's a clever strategy. It seems like they're really paying attention to consumer needs and preferences. What about their efforts to be more digitally savvy? Is it more than just that UN Neti app?
Oh, they're going all in on digital transformation. And it's touching almost every aspect of their business. In their FMCG segment, they're using data analytics to personalize their offerings, targeting specific customer segments with tailored promotions. They're also using digital tools to optimize their supply chain, which is especially important in a country as vast and diverse as India.
I can see how that would be crucial for a company with such a wide distribution network. They're also making a big push in the hotel sector, and it sounds like they're going beyond the traditional model.
Right? Their asset-right strategy is a key part of their growth plan. They're realizing that they don't have to own every hotel to benefit from the growth of the hospitality industry in India. They're opting for management contracts instead, which allows them to expand their footprint much faster and with less capital investment.
So they're being more selective about where they put their money, focusing on properties that align with their brand and their overall strategy.
Exactly. And they're not just expanding domestically, they're looking at international opportunities too. Their new property in Sri Lanka is a prime example of that outward-looking approach.
Speaking of international expansion, their agribusiness seems to be doing incredibly well with exports. Is there more to that story than just strong demand for their products?
Yeah, they're leveraging their deep understanding of Indian agriculture to create value-added products that appeal to a global market. They're not just exporting raw commodities, they're processing them and creating finished products like coffee and spices.
So they're moving up the value chain, which allows them to capture more of the profit margin.
Precisely. And they're using technology to make their operations more efficient. Their AI-powered buying platform for leaf tobacco is a great example of how they're integrating technology into their core business processes.
It sounds like they're not just reacting to market trends, they're actively shaping them.
That's a key takeaway here. ITC isn't just following the crowd. They're identifying opportunities and making bold moves to capitalize on them. Their commitment to sustainability also seems to be a big part of their brand identity.
It's not just about being environmentally responsible. It's about creating shared value for all their stakeholders, from their employees and farmers to their customers and communities. Their climate-smart agriculture program is a great example of how they're working with farmers to build resilience against climate change while also improving their livelihoods.
Yeah.
It seems like they're really trying to embed sustainability into their DNA. Now, we've talked about some of their individual initiatives, but what about the bigger picture? What are some of the key challenges and opportunities they're facing as a company?
One of their biggest challenges is the ongoing slowdown in the Indian economy. Consumer demand is weakening, and that's impacting their FMCG and paperboard segments in particular.
It sounds like they're operating in a very tough environment right now.
That's true.
Yeah.
But there are also opportunities. India's middle class is still growing, and that's creating a huge market for consumer goods and services. And the government is making a big push for infrastructure development, which could benefit their agribusiness and paperboard segments in the long run.
So it's a mixed bag, a combination of headwinds and tailwinds. How well they navigate those competing forces will determine their success in the years to come.
Exactly. They're facing some tough choices, but they're also well positioned to capitalize on the growth potential of the Indian market.
It sounds like they're in a good position to pivot and adapt as the market evolves. But what about their financial performance? We saw those strong revenue numbers. But what about their profitability?
Well, their margins are under pressure in some segments, particularly paperboards. But overall, they're still profitable, and they have a strong balance sheet. That gives them the financial flexibility to make strategic investments and to weather the current economic storm.
So they're not just surviving, they're thriving.
I'd say they're managing the situation well. They're making smart choices, investing in growth, and building a brand that's increasingly associated with sustainability and social responsibility.
It's certainly a company to keep an eye on. They're not your typical Indian conglomerate. Now we've covered their strategies, their challenges, and their financial performance. But there's one more aspect we need to explore: their corporate culture and governance.
Yeah, that's an essential piece of the puzzle. A company can have the best strategy in the world, but if its culture and governance are weak, it won't be able to execute it effectively.
So what can you tell us about ITC's culture and governance? Are they as innovative in these areas as they are in their products and services?
Well, they have a reputation for being a well-managed company, with a strong focus on ethics and compliance. Their board of directors is diverse and experienced, and they have a robust system of internal controls.
That sounds reassuring, but every company has its flaws. What are some of the potential risks or weaknesses that our listeners should be aware of?
One potential risk is that they're spread a bit thin. They're operating in a lot of different industries, and that could make it difficult for them to maintain focus and to allocate resources effectively.
It's that classic dilemma. The more you diversify, the more you have to manage.
Exactly. Another risk is that they're heavily dependent on the Indian market. While they are expanding internationally, the majority of their revenue still comes from India. If the Indian economy continues to weaken, that could have a significant impact on their bottom line.
So they're not immune to macroeconomic forces.
No company is.
Yeah.
But they are taking steps to mitigate those risks by diversifying their portfolio and expanding into new markets.
It sounds like they're aware of their vulnerabilities and are working to address them. But what about their leadership? What can you tell us about the people at the helm of this company?
Well, they're known for having a strong and stable management team with a lot of experience in the Indian market. Their chairman, Sanjeev Puri, has been with the company for over 3 decades and is highly respected in the industry.
That kind of continuity can be a real asset, especially in turbulent times. Okay, so we've covered their culture, governance, and leadership. Is there anything else our listeners should know about ITC Limited? Any surprising facts or hidden gems that might have slipped through the cracks?
One thing that often gets overlooked is their commitment to social responsibility. They've been actively involved in rural development projects for decades. And their eChopal initiative has empowered millions of farmers across India.
So they're not just focused on profits, they're trying to make a positive impact on society as well.
Exactly. And they're doing it in a way that's integrated with their business strategy. Their social responsibility initiatives are not just add-ons, they're core to their operations.
That's impressive. It sounds like they're really trying to live up to their motto of enduring value. This ties in with another layer we need to examine, the expert opinions and market perspectives that surround this complex and evolving company.
Yeah, it's fascinating to hear about their social impact. But you're right, let's step back and see ITC through the lens of, those who are watching them closely, analysts, investors, even their competitors.
Right. This is where it gets really interesting. We get to hear those whispers in the boardrooms and understand how the market is reacting to ITC's moves.
Well, one of the biggest narratives is this idea of ITC as a de-risking story. Investors are looking at them more and more as a company that's moving away from the volatility and regulatory risks of the tobacco industry. Their diversification into FMCG, hotels, and agribusiness is seen as a way to create a more stable and sustainable revenue stream.
So they're trying to shed that sin stock image and position themselves as a more diversified and responsible conglomerate. But are they moving fast enough?
That's the million-dollar question. Some analysts are bullish on their long-term prospects, especially in their non-cigarette businesses. They point to their strong brand portfolio, their deep distribution network, and their commitment to sustainability as key advantages.
Those are some serious assets. But I imagine not everyone is convinced.
Of course not. Some analysts worry that they're spreading themselves too thin and that they lack the expertise to really compete in some of these new industries they're entering. There's also concern about the pace of their transformation. Some feel they need to move faster to reduce their dependence on tobacco, while others think they should be patient and not sacrifice profitability for growth. It's a delicate balancing act.
It sounds like it. They need to be bold and ambitious, but also pragmatic and disciplined. What about their valuation? Are they being priced fairly by the market, or is there an opportunity for investors to get in on the ground floor? It's kind of a mixed bag. Some analysts think they're undervalued given their growth potential and strong fundamentals, while others say their current valuation reflects the risks that come with their reliance on tobacco. It really just depends on your risk appetite and investment horizon.
So if you believe in their ability to transform themselves, then their current valuation might look attractive for a long-term play.
Right.
But if you're more risk-averse, you might want to wait and see how things shake out.
Right.
It's fascinating how these expert opinions can be so different. It really shows how complex it is to analyze a company like ITC. But it also highlights how important it is to do your own research and come to your own conclusions.
Absolutely.
That's why these deep dives are so valuable. They give you the information and context you need to make informed decisions and to ask the right questions.
Exactly. Because ultimately, that's what it's all about. Provoking thought, stimulating curiosity, and empowering you to become a more knowledgeable and engaged investor. And that brings us to the end of our deep dive into ITC Limited. We've covered a lot today, from their financials and strategic initiatives to their sustainability commitments and the market's perception. ITC is a company in transition, moving away from their traditional reliance on tobacco and diversifying into a range of new businesses. They're facing challenges, but they're also embracing opportunities.
For sure.
ITC is a company to watch, and their future will be shaped by how well they navigate these complex forces at play in the Indian and global economies. Will they succeed in reinventing themselves? That's something for you to ponder. We'll be back soon with another deep dive into a topic that's sure to pique your curiosity.